Welcome traders, and welcome to this week's session of Mastering the Markets with me, Matt. As you all know by now, I am a senior analyst at PrimeXBT, and I'm super excited to be here with you guys today for our very first kind of news trading session, right? So we've got CPI coming out in around 30 minutes. I'm hoping the stream will go a little bit longer than that so we can view and kind of analyze this data point when the time is right. So it's going to be quite a key one. We've got forecasts coming in at around I think it's around 2 point something percent. I just want to make sure I've got my figures correct, but that is going to be quite key for us all as traders going into the remaining of the year, especially ahead of our interest rate decision next week. Now, we know that the Fed is looking at this data point with a really close angle, especially after the labor market news that came out last week, and that was with specific reference to the NFP data points that came out. So just to confirm, they're actually forecasting that the CPI year-on-year figure is going to go up by 0.1% to 2.7%. Now, this is quite a key data point to watch out for. However, I'm going to be also watching quite closely to see how that core CPI month-on-month data point comes out. That is going to be quite an interesting one for us, especially considering all of the news that's come out since Trump has won. We've obviously haven't had our CPI inflation data result come in for the month of November. So that's going to be quite an interesting one to kind of unpick and see whether that point actually comes out. I do forecast that if we do get a miss on that data point, that there is going to be a bit of volatility coming into the market when that happens. So I'm looking forward to seeing how that data result comes out. Now we've got about 30 minutes or so until we get the US inflation result. So let's keep our eyes out on that. And then just breaking into the NFP data point that came out last week. Now, remember, in the previous month, there was a miss on the data point. Now, the miss on the data point was mainly due to the hurricanes that was happening in Florida at the time. So there was a lot of jobs that were unaccounted for, and they couldn't be included in that actual NFP data change result. So hence, when we saw the low figure of around 12,000 jobs added for that month of October, it did come to a bit of a shock to everyone. However, it was kind of anticipated and priced in. So this month's data point showing actual figures of 227,000 jobs added in the month of November has been quite an interesting one. It came out a lot higher than expectations of 218,000. Now, this is also quite an interesting data point considering that the unemployment rate actually went up by 0.1%. So there's obviously a lot going on in the US at the moment. We've got Trump being inaugurated in January. So these points, as well as these data points, are obviously going to be quite crucial to understanding how the Fed is also going to play their sort of interest rate decision that they have next week. Now, we know that they have forecasted another 0.25% cut in terms of interest rate cuts. So it's going to be quite interesting to see if the Fed plays it quite cautious, considering that obviously Trump is wanting to bring in some tariff increases, which we know is probably going to bring some inflationary figures back on the cards, and it might actually potentially push inflation out, right? And if that does happen, then the Fed might also have to increase their interest rates with the outgoing CPI data point. So it's going to be quite key and quite interesting to see how these data points come out. I'm very interested to see exactly what the Fed might do next week. They have priced in obviously a 1% cut for the year, and we know that they've only cut by 0.75% for this current year, which means that there is that missing 0.25% cut missing. And because next week is our last interest rate decision for the year, it would be highly probable that the interest rate cut is going to go in effect. However, if things do change, because maybe the Fed changes their outlook a bit in terms of this labor market data, as well as potentially the CPI inflation data that is coming out this afternoon, that is obviously going to play an important role in the decision that the Fed makes next week, right? So it's going to be quite interesting to see how these data points come in. We've got roughly, I think it's about 20 minutes or so before that data point comes in. So let's hop over into the charts. Let's go through a couple of assets that I think are quite interesting. I also want to deep dive and break down our NASDAQ trade that we took together in a couple of weeks ago on our stream and our global markets update there. It was quite an interesting trade and it's actually played out really well. And I want to just show a little bit more into how you can actually use this type of analysis in your own trading plan. So let's head over to the actual platform. I'm just going to show you a couple of charts that I've got written down here on my trading view, and then we'll pop back into the actual PrimeXBT platform and show you around a couple of things, right? So here is the NASDAQ chart that we were all looking at a couple of weeks ago. And I mentioned this was quite an interesting chart for a couple of reasons, right? So we obviously had the S&P 500 at that time trading into new all-time highs, and the NASDAQ was kind of holding back a bit. It was lagging a bit. There was a bit of divergence between the two assets. So there was a bit of sort of anticipation that maybe the NASDAQ would also catch up with the momentum and the growth that the S&P 500 was also seeing during that time. And it actually played out really well. So I don't know if you can remember a couple of weeks back, but basically what we were looking for was something like this. So we were looking for this continuation play. Basically what I mean by that, well, we had this previous all-time high that was sitting over here. Remember, this was broken through and we pretty much traded into around 2,100 flat, if you want to call it that. And this was pretty much a nice momentum move back to the upside. And we were kind of looking for some sort of pullback, which we got over here, and then continuation back to the upside, right? So remember, that was quite a key and an important trade for us during that time. And what we were looking for were a couple of things, right? So one we had seen was pretty much we had this move where price had pretty much come from the highs of 21,100 flat, and it kind of repriced itself within the 20,500 region, right? And basically what we were anticipating and what we were trying to look for was some sort of reaction out of this rebalance zone, which was also lining up pretty much spot on with this area over here, which would have been my demand area where I thought potential buyers would be interested in getting back into the market before we continue to trade higher again. So what I was looking for here was a couple of things. So you could either use your Fibonacci tool and kind of mark out the high and the low, and then pretty much you could either enter a fib tool, something like that. And there you can see how the reaction off that 62% level was spot on. Remember, we only really try to use these confluences when we are looking for additional sort of reasons why potentially price might move from this area. So if you have a look over here, we had seen the sweep of liquidity on our left. We had then seen this break above over here. And this break was also tied in with the break of this previous all-time high. So hence this move over here was quite strong, and we wanted to see some sort of continuation up like that, right? So if you don't remember what we try to do in scenarios like this, where we get a clean break above, say, a previous all-time high or a previous structure point so significant like the previous all-time high, then what we're looking for is something like this, continuation pretty much back to the upside. So this would have been your higher high. You're looking for price to make a lower high and then kind of potentially trade back into new price action region. So we were a bit late on the entry as price had already tapped into the discount zone. I think it was around the Wednesday, the 20th of November. That's when we got our entry. So if I play the data bars out, it was something over here. That's where we had got our entry. Stop loss below the level, and we were trading price back into new all-time highs, depending on sort of a couple of factors, right? So if we have a look now, it was pretty much our entry was looking at something like this, and then you can see how price plays out over the next few days. It took a bit of time, and then eventually we started to see price action moving into new all-time highs, and where we are currently trading right now. So a perfectly executed trade in terms of what I kind of explained in our previous sessions in terms of how you can capitalize on these moves when price breaks into, say, new all-time highs and different regions, right? So this was quite an interesting one on NASDAQ, I thought, which would be quite interesting to dive into. We've obviously then had the dollar index kind of showing some potential signs of rejection out of this resistance area. Now remember, we don't necessarily specifically trade the dollar index. However, we do use the dollar index in sort of creating a bias or using it as an additional confluence when trading currency pairs, indices, or whatever it may be. And this will obviously determine the strength of the dollar at any given point in time. So if you have a look here, we made our new high at around 108 flat. This was pretty much lining up with previous resistance areas as well. You can see how we bounced quite nicely around September or so. And this was pretty much the Trump rally. We all saw this kind of being priced in. And that was all in anticipation of Trump obviously coming into election and into the presidential office for 2025 and onwards. So that is pretty much in a nutshell where we're currently sitting on the dollar index. I've been watching on the daily time frame this potential head and shoulders pattern that we're getting over here. I'm going to be quite interested to see if we can maybe hold these levels over here, and maybe price can kind of start to break down a bit more, and we can sort of get some sort of pullbacks on the dollar index, which would obviously mean some further strength for the likes of the euro dollar, etc. So I think this inflation data result coming out today or later this afternoon is going to play an important part in the way in which the dollar index moves going forward. Obviously, depending on how the result comes in, this is also going to play an important part in terms of what the Fed decides to do and the next interest rate cut meeting, which is obviously next week. So there's a lot of things in terms of how potentially the dollar index might trade going forward. However, if we do look at this, there are a couple of options that might be on cards or on the cards. So for example, if we had to analyze just this most recent leg and we had to look over here, you can pretty much see one of two things. So this would have been my low over here, and this would have been my high over here. And you can pretty much see how prices kind of come into this 50% area of the Fibonacci tool, which is showcased, you know, price potentially reversing from here. We've then obviously had this previous resistance area sitting over here, which we just tapped into. So we could be doing one of two things, right? We could just be trading into the short-term sort of discounted areas and then trading higher thereafter, so something like that. Or we could be potentially rejecting this area over here, and we might see price kind of break down from these areas over here. So something like this, where we get this head and shoulders formation holding. And if you have a look over here, this would be pretty much my left shoulder over here. This is quite a nice classical structure break to play, and that would be my left shoulder over there. This would be my head over here. And if you have a look now, we are potentially trying to form maybe our right shoulder. And normally when price does something like that, then we get a rollover of. So put is right now on the dollar index, and where potentially some further data point coming out in the next 2 weeks or so, role in terms of where we think price might trade to next. So if you have a look at the likes of euro dollar, for example, we should be technically seeing the inverse of, say, the dollar index, as we know that euro dollar makes up pretty much most of the dollar index composite. And you can see here we have somewhat tried to trade higher, breaking into this region over here. And we are kind of somewhat getting a similar pattern with the left shoulder over here. And we are obviously in this support area down here at around 1.0500 flat. And then you have your head formation over here. So yes, to some degree, price does look to be somewhat in alignment. But I do think euro dollar looks quite bearish still until further notice. If price maybe does hold in this, say, area over here, we might just be pushing higher before finding some more rebalanced price zones and then continuing to trade lower. So I'm going to be quite interested to see what the inflation data result comes in today. I think that's going to be an important key, especially for assets such as euro dollar and the way in which the dollar index is going to trade. So for example, if we were looking into something like this now, you could potentially look for some reactions down in these lower areas to form, say, this right shoulder. It's not really the cleanest thing that you would see out on the charts today. And because we didn't really close above this area here, it also makes me a bit concerned that maybe price might just continue to fall back down lower, right? So I'm quite interested to see how the euro dollar is going to hold up over the next sort of week or so. Another interesting pair that I've been watching where there's been quite a little bit of volatility is gold. And now gold, we all know it's been trading into new all-time highs, and it's continued to see tremendous strength since, say, the election time period. And if you can remember quite clearly, gold obviously trades really well when markets are uncertain. There seems to be some sort of uncertainty coming back into the markets now, as, say, we are trying to price in data points such as inflation, etc., and maybe potentially what the Fed might do from an interest rate decision. So if you have a look over here, price is obviously stalling just below all-time highs. Now we have our all-time high sitting at around $2,788, and we also seem to be forming this head and shoulders pattern, if you want to call it that, to the downside, which would kind of make the argument that maybe potentially, if we're looking at the dollar index, right, some further strength in the dollar index might actually push gold higher, but we do normally see an inverse correlation between the two. So it's going to be quite interesting to see how price trades. You know, when there's a bit more uncertainty in the market, and safe haven assets such as gold do tend to try and outperform your traditional assets, or do actually outperform your traditional assets. So something like this on gold, I'm actually not 100% too sure on the bias right now. If I look at this on the daily time frame, it looks like price wants to potentially kind of trade back lower. However, we might be doing something very similar to what I was showing on euro dollar, where we might just be trapping and kind of trading back into, say, new all-time highs. So if we have a look at the RSI indicator over here, there's not really much signs on the daily time frame that suggests that price is potentially overbought or oversold. Currently, we're trading pretty much flat in alignment with that 50% area. So for me personally, I'm also going to wait to see how these data points come out later today, and see exactly how we can maybe position ourselves in the trade post the announcement of that. So I'm not really going to be too interested in trading gold right now, to be honest. I'm going to wait until these data points come out, and once those data points come in, I can make some more clear, conscious decisions in terms of how I think price might react. Another interesting commodity has been oil. Now, we haven't seen oil doing much recently. If I'll be honest with you, we've been pretty much ranging in this area between the low of around 65 and, say, this internal high of around 73. We've been stuck in this range for almost 3 months now. So since pretty much September, you know, we slightly did pop our head out here when we traded a bit higher. However, oil has just really been stuck in this level, and I haven't actually been able to get a clear bias on it because we're still very much stuck in this range. So there's a couple of things that we could potentially look for, right? And if I'll be honest with you, one of those things might be just a potential sweep of this low over here. We came quite close recently. However, we didn't actually manage to get it. So if you have a look here, that would be my range low. This would be my range high. And you can pretty much see how price has just been bouncing in between this. We have obviously had this one instance where price broke into the highs and traded nearly back into the $80 region. So it looks something like this. And that was pretty much just a range play deviation out of the zone. You might have kind of, you know, mitigated some other areas of interest higher above here. And then we pretty much traded back in the range, and we've been there ever since, right? So a couple of things could happen. We could see maybe the opposite happening. And then if price maybe does manipulate to the downside, we could maybe potentially see something like this. However, if this was a manipulation to the upside, you know, and then trading back into the downside, I would have at least wanted to see these lows broken by now. But now it just looks like we potentially just trading back within this range, and we might be forming something like this on the low side of things. So if price does do something like this, I'll actually be quite interested to see if we can trade something potentially from a long perspective. So what I mean by that, I want to see price move out of this area and then kind of back in this area. And depending on if we trade back within this range or if we trade back higher, that's going to be a bit more clear in terms of bias. But I think for the most part, if I keep looking at the distribution and the accumulation that we are currently in now, I wouldn't be surprised if price manipulates to the downside, takes out around 65,500 flat, and then we see some positive moves back to the upside. Now, taking a close look at the likes of, say, an asset such as USD/JPY, we've actually seen a lot of volatility on this pair, especially today. So this is going to be quite interesting to kind of monitor. I'm very interested to see how that interest rate decision comes out for the BOJ. We know that's coming out next week too. So for the time being, you can kind of see how price is potentially looking to give a short sell here. But then again, I'm not 100% sure, because we might be potentially just kind of ranging in this area here, which we've retested now, and we might potentially just take out this high at around 160. So again, another asset class that I'm also just waiting to see the data points on. Once that interest rate decision comes out for the Japanese yen, which I think they might potentially hike interest rates again, that is definitely going to impact the way the markets are trading, especially that key carry trade that we have spoken about in the past. We know when that carry trade did come out of effect, and in August there was a big sell-off on the Japanese market, which also kind of translated into an even bigger sell-off across the board. So these are all very interesting data points that we need to keep our eyes out on. We know that the Japanese inflation data points came out higher than expected a couple of weeks back, so you would almost expect that the BOJ will potentially look to kind of hike interest rates to kind of control that inflation data point a bit more. But for the time being, these are just data points that we need to be aware of, and when they come out, we need to react specifically to how they are actually coming out and what they are trying to tell us from a market perspective. So right now, if you had to look at something like this on USD/JPY, you could have the argument that price is potentially giving you some sort of head and shoulders pattern over here and now as well, and you could potentially look for some shorts back to the downside. But then again, there is the risk that the interest rate decision comes out a little bit more different than expected, and we get thrown out of this position, especially considering that we have CPI coming out in a few minutes. So what I try to do is rather incorporate potential biases and ideas and take that into account when I'm actually looking to potentially enter into some positions. I will then use those biases to my favor, and when potentially price gets into, say, some sort of rebalance area, or if price is in a more discounted area, then I will look to potentially execute any positions. Now, something on UJ could be quite interesting would be this potential short play back out of here, but for me personally, I'm going to wait for that interest rate inflation data point to come out in the next 8 minutes or so. That is definitely going to be key to understanding exactly how the market might perceive this, and especially considering the US dollar is obviously going to impact the way in which USD/JPY trades. So I'm going to wait on a couple of plays potentially, and depending on how those results come in, I'm going to look into potentially executing something. Another interesting pair has been the S&P 500. Now, this is quite an interesting one, purely because we've actually broken into new all-time highs again. So we do seem to be lagging a little bit now in terms of price action versus, say, NASDAQ. But I wanted to show you something here which I thought was quite interesting. And obviously we know that the inflation data result coming out today, which is obviously closely related to the dollar index, is also going to impact the way the S&P 500 trades. So I wanted to just show you here, if you have a look now, we've actually had on a number of occasions price action pretty much breaking above the high. So this would be your break over here. And then price action comes and retests this broken resistance area, now acting as support. We actually tested it twice. So that would have been my second time. That kind of lined up perfectly with that daily 50 EMA. And then you can see how we pretty much shot off from here back into new all-time highs. This was that potential play that I was trying to explain that we missed on S&P 500, but we were able to catch on the NASDAQ. And that was pretty much price trading into this new high over here, which then formed this high over here at around, I think that was at around $60,000 or so. We then had price pretty much retrace back into this area over here. So we had price rebalance on the 50% level, which was around 5,800. And then we've seen this new move back to the upside. Okay. So you've seen how price is pretty much respecting these structure points really well. We break into, say, a new high. We come back, we retest it from a support area. We break into new all-time highs, retest it as retest resistance as support, and then we continue to push to the upside. So if we have a look at like the S&P 500 right now, there could be a potential play that we could be interested in. And I'd actually be quite interested to show you how you could potentially go about doing this. Would be something like this, right? So if you have a look here, yes, okay, this break above over here was a lot more aggressive, and then it was a lot more sharp in terms of a retracement. And if you have a look now at this break above here, it was a bit more, say, static. It took a little bit longer. So something like that actually might be working against us, as we potentially could see price kind of breaking down. However, if you want to apply the same rules and principles that I've been showing in the previous tutorials and live sessions, what you would want to do is keep your high and low marked out like this. You would then want to have your Fibonacci tool marking out both the low and then back into the high. So that would look something like this. I just want to make sure we don't miss the data point coming out just now. And then you would want to see price potentially mitigate something down here and then trade high. We know that this level over here would invalidate my long position, and potentially could invalidate the long continuation on the S&P 500. So what you could potentially look into doing is something like this. You have your buy limit entry set at around 5,976 flat. So it would look something like that. And then what you would do is pretty much have your stop loss below that level over there. And then you would want to try trade, say, a continuation play back to the upside. And basically what you're trying to anticipate here is that a low will be made here. So similar to how we've made lows here, here, and here. And then you would expect price, or anticipate price, to potentially trade into new all-time highs. So something above here, right? So that's pretty much in a nutshell how you could actually look into trading something like this on the S&P 500. I'm actually going to potentially enter into some buy limits on this price action. I just want to wait and see how this data result comes out in the next 30 seconds or so. So you can stay tuned live with me on this as we get, for the first time, I'm actually doing this core inflation as well as CPI inflation data results coming out on our live stream. I think it's going to be quite useful to kind of break down the results and see how potentially price reacts to this. So when trading news events like this, where we know there's a lot of heightened volatility, it's really key to understand your sort of risk parameters. Make sure you have your correct stop loss, your take profit level in place, so that if price does move against you, you are protected at all times, especially when you're trading leverage, such as the options we have on PrimeXBT. So that would be namely your CFDs as well as your crypto futures options. So if you have a look now, the result is pending. We are definitely going to see some reactions in the markets. I'm going to be looking closely to see how the S&P 500 reacts, but I also want to keep a close eye on the dollar index as well. So if we have a look now, results are still pending. Okay, so CPI inflation has come out for the year-on-year figures, 2.7%, which is in alignment. Now let's see what core CPI. Okay, so pretty much flat and in alignment. Very interesting. CPI month on month has come out actually 0.1% higher. However, core inflation data results month on month have actually stayed flat at 0.3%. So that is actually quite an interesting data result to come out. And if we have a look here, our year-on-year figures also slightly increasing. However, that was kind of forecasted and actually priced in a bit. Just going to hop over to the dollar index and see how price is trading. So we can actually see a couple of movements right now. And I wouldn't be surprised if the likes of the crypto markets are also moving in alignment with this. So you can see BTC is reacting off this. Solana, Ethereum, a couple of price action points. So it looks like for the most part, a lot of this has been priced in. And what I'm going to actually do now is just show you how you can potentially add in that potential buy limit entry on the S&P 500 if this was something you were interested in. So basically what I'll do is I'll take these price points that I have now, I'll head over to my platform, look something like this. Make sure that you've got the necessary funding sitting in your account. So if you have a look over here, I've got both USD Tether, Ethereum, as well as Bitcoin. I then may need to make sure that I transfer the necessary funding into the correct account. So for example, I want USD Tether to come out of my wallet account and filter into my CFD account, look something like this. I then go confirm. The funding will then leave your account and enter into your CFD trading platform. So it'll look something like this. You can actually see how the dollar yen is reacting quite heavily off this news. And if I go over to where it says CFD markets, you'll then be able to go filter down to where you see SP 500. Now remember, the S&P 500 is also known as SDX or ES in the scenario. So if you want to trade the S&P 500 specifically, it would look something like this. And then basically what I would do now is I would go use my price level. So let's say, for example, I would like to buy in at around 5,980. Then what I would do is I would go select a buy limit entry over here, change my order type, change it to limit. I would then go select the amount of contracts that I would like to go into. And in this example, my stop loss would be at around 5,850. So I would like to set a limit price at around, I think it was 5,970. Yeah, 5,980. So that would be my actual buy limit entry. So 5,980 is where I put my limit price. My stop loss would be at around the lows of 5,850. Okay, so you manually just punch that in. And if you have a look over here, now you can see that it's going to obviously risk around $12 on this position. So you can see here I've got around $1,000 sitting in this account. So I always risk between say 1 to 2%. I then want to trade back into the highs of say around 6,250. So I'd need to then manually change my take profit level to 6,250. And that will give me a 2-to-1, which is perfect. That's what I'm looking for. So I go send order, I go confirm. And now you have a look over here. It won't actually sit in your position side because the position is actually not active. So it will sit in the tab to the left of that, which will be your orders. And then if you have a look on here on your actual chart, you can pretty much toggle through the options. So you can see here my stop loss level is sitting there perfectly, as well as my take profit level. So that is pretty much in a nutshell how you can potentially enter into some positions on say the likes of the S&P 500. And that is pretty much in a nutshell a wrap up of today's live stream. So I hope you guys have learned something from me today. I hope you guys have enjoyed this session. Thanks for tuning in. Thanks for always supporting. I'll get through to answering a couple of your questions. Make sure you get your last remaining questions in before the stream ends, and I'll catch you guys in next week's live. Cheers.